All right, if you're an agency owner or an employer in Pennsylvania, we need to talk. We need to talk about your experience mod, because the rules of the road have officially changed. And if you're not paying close attention, well, it's already costing you money.
So let me just cut right to the chase and ask you this directly. Is your PA experience mod wrong? Because if you're still using last year's logic, last year's math, to project your next renewal, then yeah, the answer is almost certainly yes. Look, here's the deal. April 1st, 2024. That's the date everything's shifted. And this wasn't some minor tweak in the fine print. The old logic you used to rely on is now actively working against you, costing your business or your client's business real money. We're talking about a fundamental change in the whole system. Okay, first things first, you have to know who's calling the shots. Pennsylvania, you see, it marches to the beat of its own drum. The rules are governed exclusively by the Pennsylvania Compensation Rating Bureau, the PCRB. And let's be crystal clear. This is not the NCCI. Just assuming they work like any other state is the very first mistake that leads directly to overcharges. All right, let's get into the weeds. The first big problem, and I'm calling it a trap for a reason, is this so-called 25% safety valve. Now, the PCRB rolled this out, saying it was a benefit, to ease everybody into the new system, but trust me, it's actually a hidden danger. So here's how it works, plain and simple. From April 2024 all the way through March of 2026, no experience mod is allowed to change by more than 25% in 1 year. Doesn't matter if it's going up or down. On the surface, that sounds pretty good, right? Like they're trying to protect you from a huge swing. Well, let's play this out with some real numbers. Imagine your old mod was a perfect 1.00. The new math, which is way more predictive, calculates that your real mod should actually be 1.50. Ouch. But because of this 25% cap, your mod for this year is only 1.25. So you look at that, breathe a sigh of relief, and think you just saved a bunch of money. You didn't. And this is the absolute key you have to get. That cap, it's temporary. The best way to think of it is like a deferred tax bill. That 150, your real number, it hasn't gone away. It's just sitting there, lurking in the pipeline, waiting for you. This so-called protection is just hiding your true mod and kicking a massive premium increase further down the road. Now for trap number 2. I call this one the 3-decimal overcharge. And this one is literally like taking cold hard cash and just throwing it right in the garbage can because of what I call mandatory complexity. You know how most of the standard national insurance software everyone uses rounds to 2 decimal points, right? So you get a number like 1.23? Well, the PCRB's new rules, they mandate calculations using 3 decimal places, 1.234. And you're probably thinking, so what? Who cares about that tiny third number? Well, I'll tell you who cares. Your bank account. That seemingly insignificant little number can easily turn into a $5,000 overcharge on a pretty typical $10 million payroll. Suddenly, that tiny little decimal point isn't so tiny anymore, is it? That's what a rounding error costs you. And listen, these rules are not suggestions. It is exactly like a speeding ticket. You can't tell the cop you were close enough to the speed limit. The rule is the rule, the law is the law, and getting it wrong has a fixed financial penalty. Period. So after all of this, you really have to ask yourself, who is actually in control here? Who controls your premium? Let's blow up a few common myths right now. First question, who's actually doing the math? Who calculates the mod in Pennsylvania? A lot of agents, a lot of employers, they figure the carrier must have some say in it. Wrong. The answer is the PCRB. Full stop. Private carriers, the state fund, they don't calculate a thing. They just take the number the Bureau gives them and plug it in. That's it. The Bureau has absolute authority. Okay, so what about SWIFT, the State Workers Insurance Fund? They must be different, right? Surely they use a different mod. That's a common point of confusion. Nope, not at all. They use the exact same PCRB mod as every single other carrier out there. Yeah, SWIFT might be the carrier of last resort. They might take on some higher risk companies, but the math they use for the premium, it is 100% identical. All right, enough doom and gloom. We've talked about the problems, we've identified the traps, now let's talk about how you fix it. This is about mastering the new math and taking back control of the whole process. Here is your action plan. This is your checklist. Starting today, this is what professional stewardship really looks like. Number 1, you demand 3 decimal precision in all your calculations, no exceptions. 2. You verify every single unit stat data filing for accuracy. Check the data. 3. On every single renewal, you are hunting for those hidden capped ratings. And finally, number 4, you refuse to just blindly accept the default numbers from the Bureau without doing your own verification first. Doing this work isn't just good practice anymore. It is absolutely essential if you care about accuracy. Think about it like this. It's just like finding those ridiculous hidden fees on your cell phone bill. It's your money, but the phone company isn't going to call you up to give it back. You have to find the error to get your money back.
So I'm going to leave you with this question. Are you going to just let standard industry inertia, the way it's always been done, dictate your bottom line? Are you really going to let a simple rounding error determine your profitability?
The choice is pretty clear, isn't it? The rules are out there. The information is available. Master the rules and take control.